Hi everyone, welcome to Freedom Folio Weekly Tax Update. I am your tax guru Shirley. I am a licensed CPA and one of the 800 certified tax planner in the United States. My firm Freedom Folio specializes in working with real estate investors, and so far we've saved our clients $2 million in federal taxes and counting. So today I want to talk about a tax saving tip for specifically for one-person business. And this is related to health insurance. I think this is an area that's hugely overlooked by a lot of small business owners because they thought, well, because I am a sole proprietor, I do not get recognized by the IRS as a employee in my business, so all the medical expense I spend is not deductible anyways. That is true to some extent. But with our help, we were able to turn this personal medical expense into a legitimate business deduction. So let me show you how we did that. So here I have a case study. Let's say we have a client whose name is Henry. Henry operates his business as a sole proprietor. Henry is married with 2 kids. Last year, Henry's business netted $200K in profit. Henry is in 24% federal tax bracket, and he is subject to 15.3 self-employment tax because he's filing on Schedule C. State tax, where Henry is 8%. So last year, Henry spent about $22,000 on health insurance premiums and co-pays. So then, this is a very typical scenario for most small business owners. What happens, right? If we didn't put in a strategy for Henry, which is, I'm revealing the secret here, it's the 105 HRA plan. We were able to save Henry $10,626 in taxes. If we didn't have this plan in place, then normally what happens when you have personal medical expense by a business owner is that you take the itemized deduction, which is subject to the 7.5 limitation of your AGI. So in this case, even though Henry spent $20,000 in medical expenses, he could only take an itemized deduction of $10,000, and that translates to a tax saving of only $3,300. So he's losing out on the other $12,000 that he spent. So he's missing out. He's leaving money on the table because no strategy was put in place. So then, what is this 105 HRA plan, you ask? So again, like I was saying, if there's no HRA plan and then you are operating as a sole proprietor, then all the medical insurance that you spend is limited to the 7.5 AGI floor, and it does not qualify as a business deduction. And then, that also subject you to self-employment taxes and income tax and what have you. With the 105 HR plan, it's really a health care plan designed specifically for a one-person business, right? So when I say one person, that also includes Schedule C filers on 1040. So if you're a sole proprietor, you definitely fall into this category. Or if you are in a wife and a husband partnership, you could also qualify for the 105 HR plan. Or if you have a rental property that arises to the level of a business reporting that on Schedule E, you could also set up a 105 HR plan in your rental property. Now, if you're single, you're not married, you could set up a separate legal entity, a C Corp, that specifically sponsors for your 105 HR plan, and then you could still turn that personal deduction into a business deduction. So how does this all work? So in Henry's case, this is what we did for him. So way before year end, right? So when we sat down with him after we did the assessment, we identified this opportunity, then we hire his spouse part-time, or you could hire them full-time, it depends. And then we reimburse her for $22,000 of medical expenses. So this includes, health insurance premium that they pay for the whole family, co-pays, any other medical expenses not necessarily covered by their insurance policy. And then the health insurance, we have it set up under Henry's wife's name. So it's not under Henry's name, because remember, Henry is a sole proprietor, so he is not recognized by the IRS as an employee. So if we have Henry as the policy holder, then that kind of invalidates this whole strategy. And you cannot have the health insurance under the company's name, because this is it's a sole proprietor. So you gotta make sure that hire the spouse and then have the spouse be the policy holder for the health insurance. Then what we do is we make sure that we have Henry's wife pay for all those medical bills from her own personal bank account. And then she file a reimbursement claim and then have Henry's company reimbursing her for all the bills that she paid out of her personal checking account. And then we did not run any payroll for Henry's wife, but we did set up proper documentation, like a time log as to when she came in, and then the specific description of the services that she performed. And we made sure that Henry's company paid his wife a fair market value for the level of services that she did. So after doing all this, what we were able to accomplish is, first of all, we got Henry that tax deduction of $22,000, which he was not able to fully deduct before. Then the second thing is we eliminated the payroll tax, because we didn't really run the W-2 payroll for his wife. So some people may ask, well, what if the IRS challenge us on this case and say, well, if she's not on a W-2, then how can you prove that she is an employee? I think based on the IRS tax court cases, what's more important than the W-2 and also employment contract is the proper documentation of the timesheet and also the specific service that your spouse employee performed, and also making sure that it is at the market rate. That is more a stronger evidence of employment than even an employment contract or a W-2. So as long as you satisfy these documentation requirement, I think you have, you would be able to take advantage of this 105 HRA. So the key takeaway again from today's tip is 105 HRA turns your personal, non-deductible medical expenses into a legitimate business expense. And if you're single, operate a C Corp and have the C Corp provide your 105 HRA. Make your spouse compensation 105 HRA reimbursement. This eliminates the need for payroll and payroll taxes. So if you like today's little tax tip, please try to scan this QR code and follow us on social media. We do post tips like this regularly. Thanks again for your time. And then I hope you enjoy today's little episode. Thank you.